It's good to see you. You know, we've been talking a lot about whether this bull run in tech can continue. What do you think? I mean, is sentiment just too positive? And are we not considering the fact that some of these mega cap tech stocks, or companies rather, will see profit growth slim in 2025?
Well, there are some headwinds out there, and as you mentioned, sentiment is very, very high, and some of the measures are at more extreme levels. You've seen recently a surge in small business optimism and just record inflows into ETFs, and there's also record high in consumer expectations for where stocks are going. So a lot of people really feel as though the market's going to be doing well tomorrow, and the average strategist is looking for a 10% rate of return on the S&P 500. On the other hand, margin debt is not as strong as an excessive level would estimate. So you're not seeing everything. It's a headwind, and people are well aware of it, but the underlying fundamentals are strong.
So then where would you be putting your money to work as we start a new year next week, excuse me?
Right. Well, to your question that I didn't answer about tech, we are still positive on that. And although earnings growth deceleration is always a headwind for companies, the growth is still very strong. I mean, nobody really thinks that NVIDIA can compound for 5 years at 100%, and probably not at 50%. But can they continue to grow and have stronger growth than a lot of other companies in the S&P 500? I think that that's probably a likely possibility. So we still like technology stocks into 2025, but we think it makes sense to broaden exposure in the portfolio. We have about 70 stocks in our portfolio, and although when you aggregate the 493 and say, hey, there's only going to be 13% growth this year for those, there's plenty of companies in there that are well above that you can find that have strong fundamentals, and we're looking for those companies and making our bets a little bit closer to the benchmark.
And how much have you taken into account the new administration, the policy effects, tariffs, immigration, and which companies would benefit in those scenarios?
Right. Well, the short answer to that is we're aware of what the possibilities are, but it's so hard to handicap what will actually happen that you really don't want to make a bet on that without really knowing what's going to happen. I think you have to take a more broad approach. We saw what happened after the election, and the market surged into December, and then it's kind of taken a breather and done some back and forth as people reassess that. So we are hopeful that what we see is reasonable policies along the deportation lines, along tariff lines, and that the effect on inflation is muted, if not positive, but muted, so that we don't have to see interest rates taking into account much higher for longer inflation and getting up closer to the 5% area on the 10-year.